Hello, trader. Good morning, good afternoon, good evening, depending on when and where you are watching me from. If this is your first time you have landed to this channel, my name is Anthony. I'm a full-time trader. I dedicate my time to help you understand how to read the market structure. Our strategy is purely based on SMC concepts, where we analyze the chart, and I do help you guys understand how to read the market structure on your own and be able to spot the setups without depending on any signal groups. Because honestly, for me, I am still strongly convinced that market structure, mastering or understanding how to read the market structure is a blueprint to attaining profitability. Because show me a trader who doesn't know how to analyze the market, who doesn't know how to read the market structure, then I will show you a gambler. All right. So, if that is something that you would like to learn and be able to analyze the market on your own, spot setups, all right, then this is the right place for you. I have only one request for you. If you haven't subscribed to the channel, kindly make sure you do so. You subscribe to the channel. Don't forget to turn on the notification bell so that you'll be notified immediately I upload a new video. So without wasting time, let's dive into the chart and see what the market has to offer. So this video, a disclaimer, this video might be a little bit longer, but I want to promise you that this is worth your time. Make sure you learn something out of this video because I'm going to give you a thorough market analysis. Even if you are a beginner, you can still rewatch the video several times until you understand on what we are doing. So on my previous video that I uploaded lastly on last Wednesday, we didn't do analysis on dollar pairs. That is to be precise on Euro USD and GBP USD because the market was not clear for me back then, but I promise to do that once I see the market stabilizing. So, without wasting time, let's start with my favorite pair, that is the Euro USD. So here we are on monthly time frame. We are on monthly time frame. So as a beginner or as an intermediate or a professional trader, so what do I expect or what do I do once I open a new chart? So for me, I will always ask myself, once I open a new chart, I will start my analysis from the higher time frame. That is, I might start from when I'm talking about the higher time frame, I talk about daily, weekly, and monthly time frame. So if this is my first time to analyze this pair, I will go direct to the monthly time frame. So the first equation is always uh which trend are we trending on this market? Are we trending or are we consolidating? That is always the first equation that I will ask myself. Then, if you look at this market, you can see very clearly that we are bearish, right? You have not done an analysis. This is not rocket science. This is just use of your eyes. You can see very well that the market is making series of lower highs and lower lows. So once I conclude that we are bearish, then I will go to the next step. The next step will be going to the last dealing range or the swing structure, the last or the recent swing structure that the market has created. So in this matter, this is your last dealing range. You have that swing high, swing low, and this is your previous lower low, lower high, and then we have a lower low. Then we identify that one as our break of structure. So once I'm done with that, I have my break of structure. I can see we are very bearish. Then I will go to the next step, which will be identifying my point of interest. If you have been following me, you know very well. We use our Fibonacci tool. We place from the swing high to the swing low. Very easy, very simple. No complicating anything. So once I do this, the idea of doing this is for me to differentiate where is the premium and where is the discount. Because if the market is trending to the downside, or in other words, if we are bearish, we want to sell when the price is high and we want to buy when the price is low. But for this case, because we are bearish, we don't have any business with buying. So we want to wait for sales. So that means we wait for a market to come to the premium before we look for any selling opportunity. All right. So that means what? When I want to mark my point of interest, I will ignore any point of interest that is resting below the 50% of our fib retracement too. So I won't even bother to mark any point of interest that is resting at the discount, because I know most probably that point of interest is going to act as an inducement, or in other words, is going to be a trap. All right. So once I identify that, then I will mark my equilibrium, and then I remove my Fibonacci. Then what do I do now? I will mark my point of interest. If you have been following me for a while, you know very well I do like trading order blocks and fair value gaps. So those are the major point of interest that I do mark. How do I mark my point of interest? How do I mark my order block? If we are bearish, then I will look for the last bullish candle before bearish movement. That becomes my order block. As long as we have a fair value gap attached to that order block. So for this matter, because if you look closely, you can see that this extreme order block here had already been mitigated by this pullback. The market mitigated this order block. When we say this area is mitigated, we mean it has already been used up, and there is low probability that the market will come to this zone again, or there is low chances that this point of interest is going to hold the market, because it has already served its purpose. It's already been mitigated. So now I look for a fresh point of interest, and for this matter, we have this order block that is resting at this point. Now, the next step will be the hardest part, which is waiting, guys. You have to wait for a market to come to your point of interest. All right. So once the market comes to your point of interest, then this is where now we go to the next step, which is waiting for a confirmation, which I will always advise you guys to always wait for a confirmation. More so if a setup is coming from the higher time frame. All right. So for this matter, because this is a monthly point of interest, and I personally am not a position trader or a swing trader, I'm a day trader. So it's very difficult to me to start looking for entries on this time frame. All right. So what do I do? Because I'm doing my top-down analysis, then I will have to shift to my entry time frame, or a time frame that I'm supposed to wait for my confirmation. And you know very well, if we are on a monthly time frame, we are going to jump weekly time frame, and our time frame that we are supposed to wait for confirmation is on daily time frame. So if you don't know how to do the time frame alignment, find a video on this channel. I have a video on how to uh, how to do the time frame alignment and stuff like that. So make sure you to look for that video and learn more about the time frame alignment, which is also very crucial when it comes to trading, because you might have a very good setup, but if you don't know how to do the time frame alignment, then you might end up taking that entry from the wrong time frame. Okay, so then I will just shift direct to the daily time frame. So when I go to the daily time frame, what do I need to know? Or what do I expect to see here on this time frame? So if you look closely, when the market is coming back to your point of interest, you can see very clearly that this market is very bullish, right? The trend of the market is very bullish. Now, this is where it gets confusing. You know, you don't know uh, if you don't do the top-down analysis, then you will not understand why the market is reversing. Because you can see very well that since January of last year, this market was very uh, strongly bullish. But once it came close to this point of interest, you can see the kind of momentum of the candle is slowing down. All right, showing you that the market is about to reach to its objective point of interest, which is this monthly point of interest. All right, and for the first time since January of last year, the Euro USD never gave us any change of character. You can see it was really bullish. The market was making series of higher highs and higher lows. But what happens when it mitigated this zone? You can see a very good change of character. So if you have been my student, you know very well what we mean by when we say a good change of character. All right? Because not every change of character is a strong change of character. All right. So this is a very good change of character because one, we can see it swept this internal liquidity here. We have all these minor inducement here being cleared before market pushing up to give you a break of structure. Then later on, gave you a change of character or what we call a market structure shift. All right. So now the question is, immediately I see this market structure shift, do I start looking for entry immediately? No, I'm not a break and retest trader. All right. So I have to follow my procedure again, which is also very simple. So what do? I'll pick my Fibonacci again, place from the swing high to the swing low. Very easy. So what do? We wait for a market to come to the premium because that is where I have the business of shorting, right? So when the market is at the discount, I don't have any business with buying. I don't have any business with selling. So I have to wait for a market to come to the premium and then look for my entries within the premium. All right. So what do? I mark my equilibrium and then I can still remove my Fibonacci now. So what do we do now? We identify the point of interest that are resting at the premium. And I told you the easiest way to do that. So if it is confusing on this time frame for you to identify your point of interest, it is always advisable, or I always advise you go to one time frame higher. So for this matter, go to the weekly. So advantage of going to the weekly is one, on the weekly time frame we are going to have fewer candles. All right. And also don't forget, and second, remember the higher time frame point of interest is always stronger than the lower time frame point of interest. All right. So if you have a weekly point of interest and a daily point of interest, it means that market is uh, highly the market is mostly going to respect the weekly point of interest more than the daily point of interest. So when you go to this time frame, what do you see? You can see very clearly we have this very nice order block, the last buy candle before this sell movement to break this structure to the downside or to give you a change of character. So that becomes your order block because you can't see any other point of interest above here. Do we have a fair value gap below it? You can see we have a very massive fair value gap below this order block. So making this point of interest to be a very strong point of interest. So once you do that, you go back to your time frame now, which is the daily. So what do you do here? On the daily time frame, we are not going to mark a new point of interest. No. So what we do, we are going to refine up this point of interest that we have marked from the higher time frame, right? For us to get a daily zone. So that daily point of interest, it's going to be a very strong point of interest since it is inside the higher time frame point of interest. So when we refine, we are going to arrive to this candle. So this last bullish before the bearish movement, and that becomes your point of interest. So what next now? The next is just waiting. Wait for a market to come to your point of interest. Again, when the market taps to your point of interest, you because if for instance this point of interest was resting at the extreme, maybe somewhere here, then might be I might decide to take an aggressive entry from there because honestly we are not even sure whether this market is going to respect this zone because you can see very clearly we have this liquidity resting above here. So market, remember, uh, the dealing range is coming from this swing high to this swing low. So market can decide to play around within this area, right? It's not a must for a market to reverse from here. Market can decide to push up, sweep this liquidity, and even sweep this high before giving you that bearish movement. So market can decide to play around within this structure because this is just the internal structure of this external structure on the daily. So what do we do next now? So once the market comes to this area, again, I will go down to my lower time frame. That is, for this case, I will jump 4 hour, then I will go to 1 hour time frame. So what do I need to see on the 1 hour time frame? The same thing, my people, the same thing. Since what do we expect? We expect to see the 1 hour time frame being bullish as the market is approaching that point of view interest of yours. And you can see very clearly that Euro USD was one time frame. It's really very bullish coming towards this point of interest. So what do I need to see? I need to see a confirmation. Which confirmation am I talking about? I need to see at the trend shift or a market structure shift. I need to see this trend shifting from bullish to bearish. That one gives me a confidence now that the market is respecting this point of interest. Because honestly, if the market really wants to respect this point of interest, then it should shift the direction, right? From bullish to bearish. If it doesn't want to respect this zone, then it should break this zone and then continue pushing higher and higher. So what do we see? Immediately we came to this area, market gave you a break of structure here. So we identify that. So I'm not going to read all this. If you don't know, you can watch my previous video. We did all this one here. So I'm just going direct to this point of interest, at least for us to save time. So we have that bullish break of structure, and then, and this was a, if you have been following me very well, you know very well that this, I'm going to identify it as a weak break of structure. One, because it never swept liquidity within this impulsive move. And the liquidity, guys, is not within this pullback. Liquidity is not within the pullback. Liquidity is always within the impulsive move to the upside. So, and this is the impulsive move to the upside. So we have the impulsive move, correction move. So market never swept liquidity. So in other words, I know very well that this law is most probably going to be used as liquidity. So I will identify that. So what do I need? I need to see the market sweeping that low and pushing higher to give me a strong BOS. And then we have a strong break of structure. So once we have that, so what do we see now? Market came down and gave us a change of character. Very good. So now we have your change of character. So once I see this, now that is my confirmation that the market is respecting this point of interest. And when we go to the daily, when you go to the daily, what do we see? You can see also that despite the market came to this point of interest and it respecting it, it pushed higher to sweep this liquidity because you can see we have this structure here. We have this fractal break. We have the fractal break here, and this becomes our high. So market cleared the liquidity above that high before giving us a confirmation. So that means this high is our protected high, and it's a very strong high. All right. So now, since we are doing the top-down analysis, I want to show you something on the 4-hour time frame. If you look at the 4-hour time frame, this was the last break of structure on 4-hour time frame. So I need to mention this point first. This was our daily swing. This is our current daily swing. We have this high, we have this low. If the daily swing wants to come for a pullback, then expect the 4-hour swing to shift direction. What do I mean by that? You can look at this bearish movement before market broke this low. What do you see? You can see we have the internal structure of this time frame, right? So for this matter, we have this break of structure here. We also have this fractal break of structure here around this area. So what do I mean by fractal? Any structure that does not satisfy to have a valid pullback. So for me, it becomes a fractal structure. What do I mean by valid pullback? So a valid pullback for me, I should see at least 3 consecutive candles closing above each other for me to identify that one as a valid pullback. So find a video also into my channel. I have a video that is explaining more on a valid pullback. So if you don't have a 3 consecutive rule, then that becomes a fractal. So that means whatever seems to be fractal on this time frame, when you go to the 4-hour, it becomes a swing structure. All right. So if this daily swing wants to come for a pullback, then a 4-hour swing should shift direction. Let's confirm that from the 4-hour. If you look closely, this structure, that this pullback that we have seen on daily, it was just fractal. But when you come to this time frame, it becomes a swing. So this was the last 4-hour swing break of structure, which led to this change of character. So we have a change of character around this area. So after that, we have uh so we have this pullback here. Was this one a valid pullback? Exactly. As you can see, we have 1, 2, 3 consecutive candles, then we have a break of structure. So this is the last BOS. And you can see very clearly that after the market gave you this break of structure to the upside, market left a lot of massive fair value gap around this area, and the market never came to mitigate this zone, right? So what happens? Just gave a shallow pullback, pushed up, shallow pullback, pushed up again. So to me, this is just one structure from up here to this low, right? So the right confirmation or the confirmation, I'm not saying that this confirmation was not good. It was good actually. But the best confirmation was waiting for a market to take out this low. Because once the market takes out this low, it means that the 4 hour swing is agreeing with, it's giving us an indication that this pullback, this daily pullback, it's over. So once you see the 4 hour swing shifting direction, now because currently the direction or the bias of this 4 hour is bullish, right? So if we see this bullish giving you a bearish movement, that means the pullback on the daily time frame, it's over, and we are now ready to start going down. And what we see when the market came down, it never broke this low. Otherwise, it's just started respecting this low, and this became the protected low. So now this is where now I didn't do that analysis on Euro USD because Euro USD was a little bit contradicting the analysis, because ideally we can see the market came to this area and respected this zone. Why am I saying that it respected this demand zone? Because you can see gave us an internal change of character. So after giving us this internal change of character, that is to mean this I became a target now, because I don't see any reason why the market should be giving this change of character. It should have broken this low and then we continue selling. So immediately we had this internal change of character. So what happened? Euro USD came to uh, this order block down here, reacted from there and pushed I. But you can see very clearly we never closed above this I. Right? You can see very clearly we never closed above that eye. So what I was waiting for, I was really waiting for that eye to be cleared out for me to confirm that we are really bullish. But I've seen the Euro USD was struggling to break this eye. And then I had to go back and saw that we had a very strong support zone turning to resistance around this area. You can see we have this support turning to resistance. We have the market really reacting from that area, reacted here, here again, here again. So it was very difficult for market to break that eye around that area. Okay. So now, although when you go to the 1 hour time frame, this is why the higher time frame are very strong, guys. Because if you were analyzing this market from the 1 hour time frame, what could you have seen? You could have seen here we have a very valid break of structure. Then that means you start looking for buying opportunities around this area, and you can see market is always going to give you a reason to buy. You can see we had a small reaction, but eventually uh, last night, you can see the market went ahead and violated that zone to the downside. So this is why I always advise at least do your analysis from the higher time frame, at least the 4 hour time frame and above. Even if you have a structure on 1 hour time frame, always make sure you confirm it on the 4 hour time frame. Because sometimes the 1 hour time frame might be to give you a fake breakout like this one. You have a break, but when you go to the 4 hour, it's just a sweep of liquidity. All right. But if you have a break that is at least on the intermediate time frame, that is on 4 hour time frame, then the market is most probably going to respect that area, because look closely, like here the market closed here on 4 hour. If you go to 1 hour, definitely it's going to show you the market broke that eye. So that means this is why the market came and respected this zone, because the 4 hour had closed above, right? Now you see the difference. But when you go here, the 4 hour never closed. This was just a sweep. But when you go to the 1 hour, 1 hour closed. So that means what? This low, it's very weak because the 4 hour never closed above this area. So this was just a run of liquidity. And what happens once the market sweeps the buy side liquidity? Just be aware that the next target of liquidity is going to be the sell side liquidity. When the market sweeps the buy side, comes next for the sell side liquidity. Now the question is, since now we are seeing that the Euro USD has really started to move, and we have got what I needed to see actually. I can see now we have a break to the downside because this was my last market structure shift, right? So for me, whatever the market was trying to do, it was coming to sweep this liquidity around this area. So market swept this internal high. So we have that sweep of liquidity. Maybe I can try to clean my chart. I don't have to have a lot of drawings for you not to get confused. So the market swept this liquidity above here, and we are seeing now we have a change of character to the downside. So we have this change of character. It's a confirmed change of character from 4 hour. We can see we have a 4 hour candle closing below that low. Then that is now our confirmation now. We are now ready to start going down. So we have a 4 hour market structure shift. So I remove this one because I'm very sure now next the market is going to break this low. Nothing is going to stop the market from breaking this low. So since now we have this market breaking this low, if the market really wanted to buy, then it should have respected this area here. The market should have respected this area and continue buying because you can see it has already swept this minor inducement, this major inducement around this area. Okay. So since now we have this break of structure to the downside, so that means this eye that had swept liquidity becomes my protected eye. Okay, so that becomes my protected eye. So because I cannot really confirm that this is my swing low because you can't see the fractal change of character. So the current market is really bearish. But assuming this is our swing low, what do I do? You pick a Fibonacci from high to the low. Okay, like that. So what do? You want to mark the point of interest that is resting at the premium. Anything that is below here is going to be an inducement, guys. Anything that is below 50%, it's an inducement. Don't even pay attention to that. Just focus on point of interest that are resting at the premium. And for this case, I can see very clearly I have these 2 points of interest. I have this extreme order block here, and I also have this decisional point of interest. These both point of interest of mine are very valid, right? But for me, judging on the kind of momentum that we are seeing on Euro USD, I don't expect the Euro USD, or there is low probability or large chances of Euro USD coming to this extreme point of interest. But also don't forget, we don't control the market and we really don't know what is going to happen next. But I'm still convinced that the Euro USD will come to this area and respect that zone. Because one, you can see we have a very nice fair value gap below this point of interest, and we also have liquidity resting below that area. And if you look closely, that area is a very strong area for us to look for sales because you can see a support turning to resistance. We have this resistance turning to support. Okay, we have the market try to resist from that zone. We have another here. Market broke, came, retested, came to this area again, tried to retest. So this area is a very strong area for us to look for selling opportunity on Euro USD. So guys, that is my analysis on Euro USD. I think this one has taken a lot of time, but I believe you have learned something out of this analysis on the Euro USD. Maybe you can tell me on the comment section, what do you think about this analysis on Euro USD? But now, since we have that confirmation now, expect the Euro USD to come next for this low because this is our next draw of liquidity. If you go to the daily time frame, so this low becomes our next draw of liquidity. So what do we need to do? See, you need to wait for a pullback, get in, and then you can expect the Euro USD to come for these lows. But also don't forget, always uh, always pay yourself along the way. So this is where you should have your first target. Then we also have these lows, right? Always Pay yourself along the way, because don't forget, market does not just move to one direction. The market always comes for small pullbacks, right? So before market comes to this area, it has to take out this low. Market can sweep this one, have a small pullback, right, like that. All right. So that's my analysis on Euro USD. So we are going to move next to GBP USD. But before I go to the GBP USD, let's have a look at the DXY. So for those who don't know what is a DXY, this is a driver. It acts as a driver to the dollar pairs. What do I mean? I mean, whatever is going to happen to the dollar pairs, it's most probably going to follow what is currently happening on the DXY. So DXY is the dollar index. It dictates what is going to happen on the dollar pairs. So how do we use the DXY into your advantage? For those who have been asking me, can I trade the DXY? You can't trade the DXY. So what do? You use the DXY for you to analyze, or for you to know what is going to happen on the dollar.